Hi everyone, it's Grace. Welcome back to my channel. So I'm very happy to see that many of you add very interesting perspectives into the discussion of the current housing trend. Please also feel free to leave any topics that interest you the most related to real estate and the South Florida market, and I will create videos in the future about the most popular requests. Before we begin today's video, remember to subscribe to my channel and click on the bell button so you'll get notified immediately when new videos are uploaded. Also, feel free to give this video a thumbs up if you find it useful. In last week's video, I provided 6 strategies that you can follow through in a time like this. These strategies will guide you to have a clear understanding of your financial position, including your equity, debt, and other assets. Because your financial and investment strategy needs to be based on your particular financial position and your goals. To check out that video, click on the top here. As you remember, the last strategy that I mentioned in the video is that the last buyer has a way out. So in today's video, I will solely focus on the strategy for the last buyer in a coming housing crash. Currently, because of the low inventory situation that happens in many areas, including Florida, there are more buyers than the supply of housing. So buyers rush in, outbid each other to snatch up a property, hoping that its value grow fast in this period and sell it for a profit. As buyers continue to drive up the price, the housing market will eventually come down, and we're actually heading towards that peak. As any buyer would think, I want to purchase a property that skyrockets in value, and everybody's interested and outbid each other before I even think about selling. And I'm just going to sell it to the highest bidder. This is exactly what's happening right now in a real estate market. But for anyone who is about to purchase, there's also a fear that I might be the last buyer. Who's going to buy my property afterwards? So what is the strategy for the last buyer? As I mentioned in the last video, real estate investment needs to rely both on productive activities and financing activities, which creates a life and healthy cycle. After the housing market plummets, it's the perfect time for new opportunities and emerging industries. Before we discuss the tactics for the last buyer, let's take a look at where the future growth lies. The COVID-19 pandemic changes the world forever and reshuffles many industries and markets. And the following emerging markets will drive the housing market back up. 1. Life sciences. After COVID-19 and a rollout of vaccines, we can pretty much say that life sciences is one of the largest pillar industries with exponential growth opportunities. Life sciences, including new drug development, clinical trials, biotechnologies, medical devices, and all other sectors related to life sciences are growing stronger. According to Fidelity, life science tools and services industry grew by 40.71% from July 24, 2020 to July 23, 2021. In comparison, S&P 500 index grew by 35.44%. So this is a strong indicator that the life science industry will continue to grow without any sign of stopping in the long run. Number 2, green energy. We are experiencing the strongest impact from climate change right now, including severe drought, wildfire, flooding, you name it. The public is growing increasingly aware that the climate change is a real issue and that it threatens the entire society. The energy sector is transitioning from conventional energy to renewable energy. According to the U.S. Energy Information Administration report about the short-term energy outlook on July 7, 2021, the energy generation provided by coal, natural gas, nuclear, and conventional hydroelectric power is projected to drop from 3,648 to 3,355 billion kilowatts from 2019 to 2022. In the same period, the renewable energy consumption in the U.S. is projected to increase from 11.4 to 13.5 quadrillion BTU. So the renewable energy sector is gaining stronger momentum and replacing more of the conventional energy production. Number 3, AI, robotic services. Artificial intelligence is not a new technology, but as it grows more mature, robotic services will be used in more areas, including manufacturing, logistics, food and restaurant, hospitality, medical appointments, moving vehicles, so on and so forth. The COVID-19 pandemic further accelerates this trend because people now desire virtual and contactless services that get the job done quicker and more convenient. According to the International Federation of Robotics, medical robots are projected to grow from $4.1 billion to $12.6 billion from 2018 to 2023. In the same period, logistics robots are projected to grow from $0.9 billion to $7.5 billion. And field robots are projected to grow from $1.3 billion to $2 billion. Right now, it might be hard to imagine a world full of service robots, but it's happening. Number 4, space traveling. When we think about space traveling, we automatically think about only astronauts and not average people. But now, private companies are aggressively investing in space engineering, hoping to commercialize the space industry, making travel possible for average people like you and I. According to a report by McKinsey & Company on May 12, 2021, the total private company investment reached $9 billion. Private companies such as SpaceX and Boeing are partnering with government agencies such as NASA to commercialize space technology and bring passengers to space. The idea still sounds a little bit far-fetched, but since there's so much private investment in research and development, it won't be long before it becomes a reality. And these are just few of the emerging industries that will see immense growth in the future. While it's impossible to name all the emerging industries, I want to show you a projection of the market shift. According to a report by McKinsey Global Institute on February 18, 2021, the mix of occupation will see a drastic shift from 2018 to 2030. The research shows that industries like office support, production and warehousing, agriculture, customer services and sales, mechanical installation and repair, builders, community services, property maintenance experience the highest decrease, while health aides, techs, care workers, STEM professionals, health professionals, managers, business legal professionals, creative and arts management, transportation, and workforce training experience the highest increase. So, as a real estate investor, you should pay very close attention to where the markets and industries are shifting. In the next video, I will continue to the tactical part of the last buyer right before the housing crashes. I know there's a lot of information, but it's necessary to show you where the productive activities are going first. And I promise we'll get to the best part. So stay tuned. As always, thank you very much for watching, and I'll see you on the next one.